Do this. All right, so this is chapter 4 of governmental accounting, and so it's like the chapter 3 in the introductory accounting class of financial principles, where you kind of are going through common transactions for local government and understanding how they get journalized. And I think it's important when you look at this, because they do talk about this dual basis of accounting. You're going to be doing tandem entries for many of the transactions, because one is going to go into the governmental funds, financial statements, and the other is government-wide. And so the entries are very similar, but the accounts that are used relate to the financial statements, specifically like the government activities, the statement of activities. Okay, so with that, let's take a look here at the next slide. So learning objectives, we want to look at these typical operating activities, as I said before. Yes, I need to turn my marker on so I can do that. And so we're going to be looking at the appropriate journal entries at both government-wide and the governmental fund level. The adjusting entries here, there's really the only things we're going to be working on adjusting entries has to do with the supplies inventories. That's a little bit tricky, but you'll figure it out. Okay, let's advance it on. No closing entries really. How to account for interfunds. So like we've been introduced in earlier chapters, we've got buckets that we put the financial statement, or that we record transactions for different activities or functions. And sometimes we have to move money between funds. And primarily it's from a general fund or some other fund, that like enterprise fund, that has resources available, and we'll transfer. But the logic or the method that you're going to use is identical across all these funds. We're going to use other financing sources and uses, and we will call a fund transfer in or out. Okay, and then I'm not gonna have you do anything for. I don't want you to worry about the permanent fund. It really generalized the concepts that you master for these common transactions. It's real easy to extend that to the permanent fund. I'm just going to be tickled to death if you have the basics down. Okay? And there's a discussion at the appendix of the chapter that talks about these different derived revenues and why we use how the concept of measure and available comes to play on those. Okay, so all of these sample entries are based on a fictitious town, just like Smithville, and so they call it Brighton. And it's important to go through when you read the chapter to look at the examples, map them back to the reading so you can understand what's going on. Okay, and so again, we're going to look at this as two sets of accounting records. In real life, we don't do that. Okay, we just we do one method, either government-wide or governmental funds, and we keep track of the things that we have to reconcile, and we prepare both sets of financial statements from a single set of general ledger records. And that's what they talk about here, this tool basis of accounting. So it's important. I think it's an important pedagogic tool so you can understand what's going on. Now, recording the budget, this isn't anything new. What I tell students here is, okay, so this is a compound entry where they've got, instead of recording the revenue side and the related subsidiary ledgers separately, they're actually doing both. So you can see estimated revenues and our appendices together, right? So coming over here, so here's our estimated revenue accounts, and here's our appropriations. Now you don't see, the screen isn't big enough, so all we have here is the ones for the estimated revenues, right? The next slide has the appropriations part, so let me just cue that up. And so now you can see the rest of it here. Here's our appropriations, general government. Okay, so encumbrances, this is a real important concept in governmental accounting, and that we issue purchase orders, and because we're under a strict budgetary authority, we use encumbrances as placeholders. So that's a real important concept to master. And here we're just following the narrative in the textbook, in that we've got issued a bunch of purchase orders, and here's the detail for these. Okay, so here's the total, and here's how they break out. So you've got general government, right? We've got public works, and we've got culture recreation and health and welfare. So these all relate to the purchase orders that we've issued, and so they kind of hold the funds. You know, they keep us from overspending, and so that's all that's happening there. Okay, and so this encumbrances, and it's again the ledger shows a one-sided debits to reserve those funds in the individual accounts. Now we actually got some of the goods, not all of them. It's important to note here. So if you flip back here, we issued 59,000, but if you read the narrative, we actually received 22,415 of those, and so we reversed the encumbrances at the same amount that we set them up for. So we still have to understand these two slides. You have to realize that there's still purchase orders outstanding. They all have not been filled yet, and they may come in at different amounts. So sometimes it gets a little complicated, and you have to remember whatever the encumbrance the purchase order was issued for, you have to reverse that amount. Otherwise, you'll have these amounts that'll never go away. All right, and then here we're actually recording the expenditures, okay, amounts. So we set up an encumbrance, and we showed how you know, how we tied up those funds in the budget categories. The goods came in, we reversed those, and now we're looking at recording expenditures, and here's our detail for those. Okay, so notice for the items that are actually received, the purchase orders totaled 22,415. Now we have the actual cost of those items is only 19.7, so it came in lower, and we'll record those. And then down here is our governmental. We don't use encumbrances because there's no budgets in governmental wide, and that's just showing those the same expenses. But notice they're by function, whereas up here the function is in the government general fund. It's by the individual functions are kept track of in a subsidiary ledger format. Okay. And again, these are just more examples of the same thing. For a particular, we issued another purchase order for 15,000 related to public safety. Okay, and this goes through, and the items came in, and it was only for 14,500, and so there you go. And then in government activities, it's equipment, and so you debit the equipment account as opposed to expenditures. So this is important to kind of realize. Again, it reinforces the discussion, conceptual discussion in the first couple chapters. Under governmental funds, it doesn't matter whether it's an expenditure for an item that's consumed immediately or it's a long-term capital asset. The accounting is the same. It's counted as an outflow of resources, hence the expenditures, whereas in government-wide, we keep track of whether it's an expense or an asset. And in this case, it's an asset. This is just paying for the goods that were received and some other items that were on the books, and so you can kind of see, and we use this due to federal government to record a satisfaction of an obligation, usually relating to payroll. And here's the entry for payroll now, and so again we'll record the expenditures for the total, and then down in the bottom half of the slide it breaks out by function. So these would be the wages by governmental function. And in government activities, it's exactly the same, except we don't use the subsidiary ledger. We have actual accounts: general government, public safety, public works. Okay, so there is a lot of similarity here, but they are different. And then here's our related payroll taxes. So yeah, actually, here's where we're issuing checks, and then again, we're recording the payroll expenditures, the employer share of those, and that's the increment here. Okay, and the parallel for government activities. I'm not going to do all 50 slides here, but I do want to go through and review some of these. All right, and again, we've talked about property taxes already, but here's another more detailed example. Okay, and they talk about why we accrue property taxes here. And the one thing that's really important, conceptually different to realize here, is that we will have the way we record the revenue and related bad debts expenses. It's different. Here we record the receivable at the full amount of the levy. This is what's owed to us based on the underlying market value of the property, and the mill rate, or tax that determines the levy. We record only the revenue for the amount we expect to receive. That's the measurable and available. And this, typically we record bad debts expense as a separate amount. Here we actually net it out of revenue, right? And so we have this related valuation account for our receivables, but in the income statement we just record revenues at the realizable amount. Okay, and then here's this related subsidiary entry, right? So that's just showing how it goes in. And typically, as we'll see in some problems, you actually have multiple revenues that are being recorded at one time, and that's why you have a detailed ledger. And that keeps track of revenues in the by source in the general fund or government activities. Down here in government activities, it's exactly the same, except one note difference here. We always have, there's two types of revenues, general and program, and so we'll see, here's general revenues, and for others we'll have the program type on there. So it'll be, general government or public safety, and it'll say, capital grant, operating grant, or so forth. Okay, so let's press on. So here we have collection of these some of the property taxes, and then once the due date arrives, anything that has been paid is considered delinquent, and we're just the bottom part of the slide is just classifying in both the general fund and government activities for those delinquent property taxes. So we do both the receivable and the related allowance. Okay, and then one thing that conceptually is a little difficult for students is that on the delinquent amounts, we're actually going to record an interest and penalty revenue with an allowance for uncollectible. So we're going to actually estimate and accrue additional revenue, even though these are past due or delinquent at the time we do that. So conceptually, students kind of struggle with that. Well, wait a minute, why are we recognizing revenue on something that hasn't been paid? And it's because we have a legal right to it, and we can enforce that in 99% of the cases. And here's just showing the same thing for government activities. All right, and then when we later get payment for those things, we're just showing the collection of the cash, debit cash, credit to the receivable for the tax receivable and the related receivable for interest and penalties. Okay. And then here's just writing off, and I'm going to just go through. Now this slide is showing us what happens when we get other revenues. Okay, so here we're getting in the general fund cash for $365,000. We're crediting that revenue account, but this actually is just the roll up of all these details from the subsidiary ledger, right? The sales tax, and we under the revenue recognition concept of measurable and available, we typically, unless there's extremely unique circumstances, we typically record these as revenues only when they're reported and paid. And here's the same parallel for the governmental activities. And again, notice now there's program revenues. So we have program revenues, and then on the bottom general revenues. So we segregate revenues by program type, and within that, whether it's user fees or capital grants or whatever, and then between general revenues. Tax anticipation, we have a couple problems that talk about this, and the concept is just that oftentimes we have to fund government before revenues have been received, and so we'll go and borrow it. And here's the issuance of it. We record it at the face amount, and then when it's paid, we'll recognize interest. And there's a parallel between, you can see, the general fund and government activities. All right, we're going to skip these other things where you've got encumbrances that are purchase orders issued, and encumbrances that aren't fulfilled by the end of the fiscal year. You have to look at the specific policy for a state or local government about whether those funds can carry over and be filled. The big thing here is that if you exceed the original estimated amount that was the purchase order was issued for, you typically have to take those additional funds out of the current year budget. And if the goods come in lower, you don't typically get to spend those. It just rolls back into the unappropriated fund balance. Budgets get revised. You go through and do a legally binding budget amendment, and we have some problems that have you do that analysis. Inventories, again, this is a little bit tricky area, and we'll work through the example, but I think the book does a decent job with this, but it is a little confusing. One is the purchase method. That's like the income statement method parallel for introductory accounting, where when you make purchases of supplies. And this is just supplies because we're not really, our inventories are just incidentals that we would use to support public works, public safety, whatever, general government. But we, in the purchases method, we expense everything, and then we count goods at year end, and if they're significant, we should adjust supplies inventory. And the trick in this is just that adjustment at year end to get the supplies inventory on the balance sheet correct, and the appropriate fund balance that's tied up in those supplies. And that's really what's different here. One takes the approach from the income statement, the purchase method. The other is the balance sheet approach. And so all the supplies are added to the inventory account under the consumption method, and then you expense those actually whenever you requisition them throughout the year, because it's similar to the periodic method there, or perpetual method. And so at the end of the year, you're good to go. And we're not going to talk about these things because really the trick here in deciding what gets closed is knowing the difference between the balance sheet accounts and the operating accounts. And we close all the operating accounts and the budget. So the budget is just the reversal of what was entered when we created the budget or recorded the budget, and then the closing entries are going to be just whatever the balances are in the operating accounts to eliminate those. Okay, special revenues. Again, this is, I think, kind of short-shifted here, but there's it talks about a page and a half about special revenue. In Alaska, this is pretty important. You get these grant funds from state agencies and federal agencies. They represent a large source of funding. Just be aware that they typically are restricted. They are restricted for purpose. In other words, when you get these funds, you have to use them for a designated purpose. There's also a time period that's often that limits when they can be spent. So you've got an activity that it will support, and it has to be during a certain time period, fiscal year. And these are just, the accounting changes a little bit for these things depending on restrictions. Typically here, what I tell students in class is revenue recognition for special revenues follows expenses. So you have to incur allowable expenses, and then, only then, you record revenues. Okay. Inter funds, we're not going to talk about trusts yet. Permanent funds, we're going to skip all the permanent fund transactions. And so that's it in a nutshell. So we'll go ahead and close this out.